You only need to understand one decision to invest in ETFs, just one, and your calendar has already made most of it for you. If all those funds and letters have ever made you feel lost, stay with me. The easy way here turns out to be the best way. Quick note before we start. This is general financial education, not advice tailored to you. And I never tell you what specific investments to buy. For guidance on your own situation, talk to a professional. And on debt, tax, and planning, that can be me. By the end of this video, your whole ETF strategy is going to fit on a sticky note. One decision, one fund, done. No master's degree, no reading 100 books, no sitting in a forum arguing about letters. Just the easiest way to invest in ETFs without the overwhelm. And if a calmer, simpler version of investing sounds good to you, do me a quick favor and tap the like button. It tells YouTube to put this video in front of other people who've been overthinking the same thing. You're really not the only one. Thank you. So you finally decide you shouldn't just leave your money sitting in cash. You download one of the apps. Well, Simple, Questrade, whichever one. You set up the account and then you open it, and there are 2,000 funds. Okay, more than that, staring back at you, just letters and acronyms. So you Google it, you watch a video, you end up in a forum where everyone is fighting over 6 letters. This one's better than that one. That one beats this one. And you have no idea what any of them are talking about. So you close the tab and you feel a little dumb. Like maybe investing just isn't for you. I want to tell you there's nothing wrong with you. What's wrong is having over 2,000 ETFs to choose from in the first place. That part is just wrong. And that's not an accident. The companies making all these funds aren't in a rush to make this simple for you. More products, more fees. So please don't feel dumb. This was never about you. And here's the good news, this can be easy. You don't need to read 100 books or feel like you need a master's degree to do it. Because when it comes to your ETF strategy, it was never about picking the perfect fund. That's not what gives you the result. All that back and forth, this ticker versus that ticker, honestly, a lot of it is just content. It's entertainment. It's not what investing is actually about. And it is not the hard part. It is not the decision you need to pour your energy into. There's really only one decision that matters. And the beautiful part, your calendar mostly makes it for you. It comes down to one question: how much time does your money have before you need it? That's it. That's what tells you what to buy. So you can forget the whole battle of the ETFs. So let's make that one decision together and you'll see how fast it goes. Think of it like a single dial. Turn the dial all the way up and you're all in stocks. Turn it all the way down and you're all in the calm, steady side, things like bonds. Everything, everywhere in between is just some mix of the two. Now, where you set that dial isn't about being brave or being smart, it's about time. If you don't need this money for 30 years, you can leave the dial all the way up high because you've got all the time in the world to ride out the bumps. If you need it in 5 years, you turn the dial down so that a rough year doesn't catch you right when you need the cash. That's the whole decision. And here's a little proof that the fund really isn't the hard part. The all stock version and the more balanced version of these funds hold the same companies. The only difference between them is how much of that calmer, steadier piece is mixed in. That's it. That's the dial. So before you think about a single ticker, just answer that one question: when do I need this money? Say your answer out loud in one sentence. That's step one, done. Now, step two, the part everyone thinks is the hard choice, and it's the easy one. There's a kind of ETF that's basically one box that holds the whole world. Yes, you buy that one fund, and inside it is something like 9,000 companies from Canada, the US, international, everywhere. And it cleans up after itself. When things drift a little out of line, it quietly rebalances for you. No spreadsheets, no chore every few months. They're called the all in one or asset allocation ETFs. And there's a version built for each setting on your dial. So your job is simple. Pick the one that matches the dial you just set. Now, which brand of box? Here's the part that will save you a week of stress. They're nearly identical. The two most argued about ones posted the same return last year. The same. So those letters people fight over, that's the part that matters least. And the box itself is cheap and it keeps getting cheaper. One of the big providers trimmed its fee again at the end of 2025. You're looking at around a fifth of 1% a year. Compare that to the old bank funds at around 2%. Sounds like nothing. It isn't. Same money in, same returns, just a bigger fee on one side. Over 25 years, that gap can quietly cost you more than everything you put in. So if you've been frozen on which fund to pick, take a breath. You almost can't get this part wrong. And if that just lifted a weight off your shoulders, hit subscribe. Calm, doable money with no hype is the whole point of this channel. Step three is the laziest one. I know, lazy sometimes get the wrong, I don't know, but lazy is sometimes good. It's the laziest one on purpose. Set it to buy automatically, a little every payday, like a bill you forget you're even paying. And do it inside a registered account, your TFSA, your RSP, or your FHSA, so that the tax stays out of it too. Then you close the app and you go live your life. You know it's working when a whole month goes by and you realize you didn't think about it once. Okay, so where do people get stuck? If you're even a little curious about investing, you've probably watched the videos and read the blog posts and sat in the comment sections where people nerd out over what this fund has that that one doesn't. And the special exotic funds, the ones that focus on one little niche, mining, high tech, crypto. And I think that's exactly what gets a lot of people in trouble. Because you watch enough of those videos and you start to believe your portfolio needs to be complicated to be any good. It doesn't. Your portfolio does not need to be complicated. Simple is perfect. Simple is what quietly builds the wealth. You do not need exotic funds to get a good return. Take a leveraged or inverse ETF, one of those 2 times, 3 times funds. In the fine print, the company itself tells you it's built to be held for a single day and watched daily. That's not investing. That's a part time job. Or take a single coin crypto fund. You're paying several times the fee of the all in one for one wild bet. And that's the quiet catch. These exotic funds almost come with a high fee, and that fee is completely unnecessary and completely avoidable. Sorry to keep hammering on it, but that's the point. Let's bring it home. This strategy isn't just the easy one. For most people, it's the best one. And here's why: you have a life. You want to go fishing, swimming, you want to take that summer trip. You've got a full time job. You've got a family to take care of and enjoy. You don't want to spend your days picking stocks and watching tickers. You want to set it, forget it, and checking on it every once in a while. That's exactly why this is the best strategy for you. And yes, it might sound boring, but it works. And boring is a sign that you're doing it right, not the sign that you settled for less. You didn't miss some clever version that the confident sounding people found. This is the clever version. And if you'd like a calm version of this in your inbox, I write a short letter every Sunday, the Sunday Money Letter. About 500 words, one idea, no hype, no homework. Just a steady voice in your corner on the weekend. The link's in the description. Now, what can you do today? It's one of two situations. If you've already got a portfolio with a pile of ETF in it, 10, 15 funds you stitched together from old videos, today's a good day to tidy it up. Trim it down to one or two simple funds. And if you haven't started yet, well, now you know the easy way. So you don't have to feel overwhelmed and frozen by it anymore. Either way, it's the same little checklist. Say your dial setting in one sentence. Open or log into your TFSA, RRSP, or FHSA. Set one automatic purchase of one all in F ETF that matches your mix. Then turn it on and walk away. That's the whole sticky note. The next time you feel behind because someone else's plan sounds more exciting than yours, don't. Yours is the one that's working. You've got a strategy that fits on a sticky note and quietly does better than the one the loud guy is sweating over. That's not the runner up prize. That's the prize. And one last thing. Once your strategy is this simple, the only thing left that can really cost you is how you behave when the market gets scary. I made a whole video on that one mistake that's quietly costing the average investor a small fortune. Go watch that one next. I'll see you there.